Who really looks at stocks very closely. This is a bottoms-up operation for you. Let's talk about Tesla, because Tesla shares for the year to date are up 80%, but for the 1 year period, they're still down 35%. This is a stock that's gone from $381 to $108 and back up over the last year. That is a lot of volatility.
Yeah.
It's been a ride.
I agree with that.
If you are holding off on buying Tesla shares or adding to the ones that you already have, then this could be the video that's going to change your mind, as American stock investor Ron Barron reveals something interesting about Tesla.
For Tesla,
meaning what?
Yeah, so they did 310,000 cars in the quarter, and people said, well, they should have done 317,000 cars in the quarter. And but the plant in China was closed for 4 or 5 days, and there's supply chain problems in this period of time. And so everyone's focused on with this quarter for 310,000 cars. In 4 years, 3 years, they're going to be doing $1 million a quarter, not 310,000, a million cars a quarter. And if you go 10 years, they're going to be doing something like 5 million cars a quarter. So here you are doing 310,000 cars, and people saying a few thousand more, a few thousand less. I'm thinking about in 8 or 10 years, this is 20 million car company.
You expect to still be an investor in 8 to 10 years?
Yes.
Are you selling any more shares?
Periodically, if people say, you know, if it gets crazy big relative to the size of the fund right now, then I would. I own 1 million quarter shares for our firm in the company. I have not sold a single share of that.
Ron Barron is a big fan of Tesla. In a previous interview, the Tesla bull advised investors to look past near-term speed bumps, but instead focus on the long-term potential of the car company. And this could in fact be the best advice that Tesla investors need to hear right now. There's no denying that since its initial public offering in 2010, Tesla has become a story stock. As of April 6th this year, a $10,000 investment in the car on its IPO date will be worth about $1.16 million. That is about 100 times more the amount invested. What does this translate to for Tesla fans? We're just about to find out. Hey guys, welcome back to Tesla Tomorrow. Barron is huge on Tesla stock, and it is obvious that he is nowhere near ready to cash out on his investment in the car company. The Tesla bull affirmed his willingness and capacity to hold Tesla stock in 8 to 10 years. Despite the high volatility of the stock, Ron Barron is extremely bullish on Tesla, with an over $300 million bet on the car company. As of April last year, his firm, Barron Capital, had about 12.8% of its total assets under management invested in Tesla, worth about $6.2 billion at the time. Will this growth story continue? Or will Tesla take the heat from rising competition and tough market conditions? Let's see what Ron Barron thinks all about this. But before we get on with it, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. The billionaire investor has historically looked to invest in companies that are growing revenues over 15% annually on average. He also looks for those that actively reinvest in their business, identifying this as a bullish sign for future growth. Ron Barron particularly likes leisure stocks, which he thinks have large upside potential in the years ahead, and this is fueled by his optimism about an eventual market rebound and economic recovery. Although the Tesla bull admitted that stock market performance last year was not great, he did describe it as being relative. He further advised that investors need to know why they are investing in a particular stock and the growth fundamentals of the company. Barron stated that investors may want to consider betting on companies with competitive advantage, and he described these as companies that make it difficult for others to compete against them. Tesla has a huge advantage, a huge competitive advantage even, in the EV and general automobile industry. And this could be why Ron Barron is rather keen on the company and its stock. Tesla has recently stated that it is focused on continuous product improvement through original engineering and manufacturing processes that have further optimized its ability to make it the best product for an industry-leading cost. The automaker also added that as it exits what has been a turbulent year of supply chain disruptions, and has also observed a number of normalizations with regards to cost inflation, giving it the confidence to pass these through to its customers. A key factor that has contributed to the rise in Tesla's stock price so far this year has actually been its price cuts. According to Barron, there's been an unprecedented demand for Tesla cars, and it's going on right now. And while Elon Musk predicts 20 million cars by 2030, he's thinking $1,500 share price by then. In November, Ron Barron noted that demand remained good for Tesla, despite wider market sell-off. According to him, in 10 years, Tesla will be the largest and most profitable company in the world. The Tesla bull considers Tesla cars the safest in the world, and he thinks Tesla could become the most profitable company in the world in a matter of years. He's remained bullish on Tesla over the years, despite the rather tough market conditions, and he still believes that in 10 years, the only company that can challenge Tesla will be its sister company SpaceX. Barron sees Tesla growing to 20 million cars a year in the future. According to him, at 5 million vehicles a quarter, or 20 million per year, Tesla's automotive business will be worth roughly the combined size of Toyota and Volkswagen, which are currently the world's two largest automakers. Ron Barron remains an ardent fan of Tesla CEO Elon Musk, and has previously said that he isn't that worried about Musk's decision to invest in Twitter, and if it will become a distraction. He thinks that Musk's investment in Twitter is helping his overall marketing, and that Tesla and Twitter CEO is going to keep focusing on the things that matter. Barron Capital recently held its first annual gathering since 2019, featuring an interview with Tesla CEO Elon Musk in front of 5,000 investors at the Metropolitan Opera House in New York City. The interview came during a tough year for the stock market at large, but instead of focusing on the present, Barron focused on where Tesla was headed, reiterating his bullishness on the automaker. Ron Barron has constantly revealed some long-term predictions for Tesla. According to him, in 4 years, the automaker will be able to make 1 million cars a quarter, and after 10 years, it could go up to 5 million cars a quarter. In his valuation of Tesla, Barron emphasized that this bull case relies solely on Tesla's revenue from its EVs, and does not include the other areas the company is working on. He excluded Tesla's robots, its autonomous vehicles, and even the battery business. While he did reiterate that Tesla CEO Elon Musk thinks that the Tesla bot is going to be bigger than the car business, he still added that there are lots of things happening at Tesla, which makes it hard to keep up with the company. Although Barron may seem modest in his revenue target for Tesla, his estimation provides a margin of safety on his investment. While many investors view Tesla through the lens of a traditional automotive company, it is far from that. In fact, some market participants argue that Tesla should be treated as a technology company with automotive exposure, and not the other way around. Tesla's AI footprint could also be a big booster for the stock over the long term, and Ron Barron is not even including this in his valuation. Investment firm ARK Invest itself stated that Tesla's vertical integration strategy and Dojo training supercomputer are key competitive advantages. Barron is the CEO of Barron Capital Management, which is currently among Tesla's largest investors. And despite the constant decline in the Tesla's share price, the asset management firm is still bullish on Tesla. Ron Barron previously disclosed that there has been criticism about his strong bullishness on the car company. According to him, we're getting widely criticized for having such a large percentage of his firm's assets in one stock, but despite this, he still believes in Tesla. Barron revealed that his company made about 20 times the returns on his $380 million investment in Tesla. The Tesla bull revealed this in an interview, adding that Barron Capital Management has been a Tesla investor since the time when Tesla stock was going to $40 per share, and has made about $6 billion in profit since then. The stock expert has since long been bullish on Tesla, having first acquired a stake in the company back in 2014. Between Barron's holdings and his clients' holdings at Barron Capital, the billionaire has a combined stake in Tesla worth about $4 billion. Ron Barron has been one of Tesla's largest shareholders for years, and he has no plans to change that. The stock investor recently told CNBC that he thinks that Tesla's high-flying stock has much more room to run, and that he plans to continue holding onto the company's stock for at least 8 more years. He said, "I think we're going to make 3, 4, 5 times our money on Tesla from here. I think for Tesla, this is the very beginning of what they're doing." Barron is optimistic about the future for Tesla, whether or not it's going to be bright or dark, and huge returns for its investors in the future are also on ice. Interestingly, just as he is bullish on Tesla, he's also bullish on its sister company SpaceX, previously disclosing that he'd added another $100 million to his shareholdings on the spaceship company. Do you think Ron Barron is right about Tesla? Let us know down below, and don't forget to tell us what your valuation on Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.